All right, good morning. It is Monday, January the 29th, 2024. We hope you had a nice weekend. Beautiful weekend here in Charleston. It's nice to be back after we were on our advisor Tyson and I were on the road for a little bit there. So it's always nice to be home. I actually have my dad in town, so my kids are loving spending time with Grandpa. We went to the hockey game, the Stingrays game yesterday on Sunday, which was really fun. I made the mistake of gave both of my kids way too large a serving of the Dippin' Dots ice cream at the game. So we had to leave. But the third period was starting, and they were both going so crazy, and frankly didn't care all that much for the outcome of the game. So we had a great time though. When we left there, went in 4-2. I didn't even check how the game ended up, but great weekend nonetheless. So we hope you had a nice weekend as well. Markets last week, okay. Equity markets here in the U.S. up a little bit, just a touch again. The primary driver there, a better than expected GDP, gross domestic product report for the fourth quarter came in at 3.3%, which was down from the third quarter, but yet exceeded expectations on what most economists were expecting. All right, so again, we'll see how that plays out in future quarters. This week will be interesting. We have a Fed meeting, kind of Wednesday. So the expectation is no rate cut. Okay, that's again, you never know for sure though, right? Here we have inflation's kind of subsided, at least in terms of the rate of change, but economic activity has, at least up to this point, probably been too strong to warrant that lower cost of capital. So baseline expectation, the Fed keeps rates where they are for now for this meeting. We also receive on Friday the employment report for January, and that's the one. I say it every month, but I think the Fed included, everyone's just kind of waiting for that number, right, for the unemployment number to start ticking up a little bit, but it remains strong. So we'll see. Obviously, the higher interest rates seem to be impacting residential a little bit, but at the same time, right, because rates are so high and inventory, because it remains kind of smaller, it's probably holding up the prices of residential homes, a fair amount. Whereas on the commercial side, that's where you're seeing the higher rates really impact. So all these moving parts, which makes markets so fun to study and just kind of see the way things play out. The other thing I wanted to quickly make note of, obviously spring reviews are coming up here in about a month. Please begin giving some consideration to anything you want to add to your spring agenda. Okay, so as always, we try really hard to prepare a great deal for important topics that we're going to discuss anyway. Performance of investment accounts. If we want to be contributing to IRAs, Roth IRAs before the April deadline, we'll be looking at retirement projections. All these things that we always do anyway. But the most important item on the agenda is always things that you think of that you want to add. So just start giving some consideration, and then when you go to schedule your review, just let us know, because we want to have time to prepare and put together slides for you if there is a particular topic of interest that you want to dig into a little bit more. So just let us know on that, and we hope you have a great week, and we will talk to you soon. Thank you.